Michael Feroli is chief U.S. economist for JPMorgan Securities. He's also a Bloomberg Best. He's with us from his office in Manhattan. Michael, welcome to In Business. So are you among the consumers who are paying more to live, yet you feel better about things?
Well, I mean, it was a pretty modest move up in consumer sentiment. It may have been a little bit of a bin Laden bounce. But overall, I think you're still seeing pretty depressed levels of consumer sentiment, and higher food and energy prices, I think, are a major culprit.
And when we look at those two different ways to really read this morning's inflation numbers, either you believe that food and energy are inflationary or you don't. Tell me what your takeaway is. Do you think that we're topping out the price spike?
I think so, certainly on a headline basis. If the move down in commodities that we've seen over the past week is going to be sustained, then we've probably reached near the worst we've seen. Core inflation has been running pretty high, and I think some of the elements in there may also be a little bit temporary. So I think the worst may not be totally behind us, but I think it's close to being behind us.
You know, within those numbers, we did also see that rents were going up. We also saw that for auto sales, producers of cars feel like they've got pricing power on their side. So are we still moving into an environment where retailers and producers feel they can raise prices?
So rents have actually decelerated over the past 6 months. They're still increasing, of course, but at a slower and slower pace. I think on the auto side, you're right. That was a very big move up we saw this month. Some of that may be related to the supply chain disruptions due to the Japanese set of tragedies. So I'm not sure how much of that is going to be sustained. We could see, I think still probably further moves up in auto prices. But again, I think some of that is due to some of these temporary supply chain disruptions.
So how do we reach this level of, unemployment's still high. How do we reach this level where prices can inch up as unemployment still remains at these elevated levels? I mean, they seem to have to move in tandem, no?
Well, wage inflation, which you think is going to be most closely related to the unemployment rate, hasn't moved up. What you've seen is moves up in the price of globally traded commodities like gasoline. And I think that's really just destroying consumer purchasing power. I don't think you're right. I don't think that can be sustained over a very long period of time, which is why over time I think wage and price inflation will kind of come back in line.
So put it in perspective from what else we learned this week in terms of economic data points. First time jobless claims and the rise in the most recent reports on unemployment seem to be contradicting that labor report we got just the first week of the month.
That's right. I mean, the labor report, which reached back to mid-April, really, was very favorable. Since then, we've seen a deterioration in claims, which is a little bit worrying. And we've seen kind of softer April retail sales numbers. So we may have lost a little bit of momentum as we went through the month of April. I still think we're going to grow pretty decently this quarter, but it does seem like we may have lost a little bit of momentum.
So, well, what is your read, though, on overall growth in the economy? It sounds like we're starting to tread water a little bit just as we get closer to the end of June and the end of QE2.
Yeah, we're certainly not growing robustly above trend, which had been the hope coming into this year. Second quarter, I think we'll still do better than the first quarter, which was a big disappointment, but I'm not sure we're going to grow above trend in the second quarter either. So we may come into the end of QE2 with 2 quarters of trend-like growth.
All right, Michael Feroli, chief economist. Thank you so much for joining us and giving us your read on today's figures.